Well, good afternoon, everybody, and welcome back to day 3 of the NWR Small Cap Investor Conference. On the line today, we have management from Forbidden Foods Limited. So Forbidden Foods is a diverse multi-brand food and beverage company which focuses on the wellness and organic markets, having established multiple national and international sales channels. Forbidden was established 10 years ago with a vision to provide Australia with the very best health foods and to meet growing demand from consumers for differentiated, health-oriented products. Forbidden sources its key inputs locally, which allows the company to leverage Victoria and Australia's unique provenance through the paddock to plate, or paddock to pouch in this case, kind of brand story. And the company listed on the ASX just a few months ago in August and has done quite well in terms of on-market traction since then. So presenting today, we've got Marcus Brown, who's the CEO and Managing Director and co-founder of Forbidden Foods. Back in 2010, Marcus and his co-founder, Jared Milani, recognised an opportunity to build a strong brand-led food business by introducing unique rice varieties into Australia and New Zealand. Prior to Forbidden, Marcus worked in the corporate risk management and international captive insurance teams at Aon, where he assisted multinational companies manage risk and insurance. So for any attendees on the call who would like to ask questions, just pop them into the Q&A box at the bottom of your Zoom panel, and we'll pick them up at the end of Marcus's presentation. So with that, Marcus, I'll hand the reins across to you. Go ahead.
Thank you, Tim, and welcome all. Thanks for joining me today. Look, Forbidden Foods, as Tim has mentioned, we are a multi-brand business of basically plant-based ingredients as well as various specialty grains, organics and snack foods. The business has been moving quite strongly into the baby food space, and that was a big reason for our IPO just a couple of months ago. From there, look, we've had a really successful launch to market. Sort of 2 months in from IPO, we had our first quarterly. We've had a good stable grouping of sales, and COVID hasn't really affected the business. So from here, with a strong cash base, the business is in a good position to grow quite strong in the next few months as we roll out the new product offerings in scale. The business itself, we have been very strong in organic foods over the last 10 years, predominantly in the grains, rice, of alternative powder space. Recently, so the last 2-3 years, we've been pushing quite heavily into alternative snacks. So, protein snacks, gut health, pre and probiotic snacks, and that's been doing quite well. So the brand we have under Funch is going to drive a lot of that growth, especially in those new segments. We do have a very diversified customer base. So the business is not what you'd call a business plan company. We've had major customers, major retailers, major distributors for many years now. So essentially the capital we raised on IPO is being deployed into that growth of sales, marketing and brand across our existing channels, which is great because we don't have to go out and buy existing channels or sort of grow that from scratch, which might take, a couple of years like some other businesses. The brand Australia, so all our baby foods will be 100% Australian, which is a great thing because a lot of our competitor brands aren't Australian in entirety. A lot of them using imported products, imported purees and pastes, which obviously do come with those quality concerns. So all our produce for the baby foods is 100% Australian, which is great for locals purchasing, but also perfect for an export message. We've really built a strong brand around that export of Australian produce. International opportunities, we do already play in New Zealand as well as Singapore, US. We do ship to various continents already. So we are using those relationships now with the new products getting launched to grow them further. And obviously get into segments and retail segments that we haven't been able to without sufficient capital. So the markets we predominantly play in are, we don't touch, we basically don't touch dairy, we don't touch any meat derived products, and we never have. So the business has got a supply chain and it's got an ethos, it's got a brand message that is very much where the trends are going now. And we might have launched a few years ago and probably before the trends, but we're smack bang in the middle now with established business, established brands. and supply chains ready to grow. So our baby foods, as you see there, we did announce a deal with AUR Foodworks. They're going to launch that, towards the end of December. We're going to start putting in stock. And then we have some exciting announcements too over the coming weeks, which will drive those baby foods quite strong into our core markets and right into where our competitors sit. So we see us having quite a bit of cut through very quickly. The plant-based foods, we do rice, rice powders and flours, all these alternative high protein, high fibre ingredients, which we've been supplying for quite a few years now into a lot of companies that are now getting quite a lot of prominence. So these ingredients are very much getting more popular, especially with at-home eating. People are cooking a lot more, and we've seen retail demand grow quite strong for ingredients that have an edge in protein, fibre, or a nutritional profile that's beneficial. So essentially, we don't touch meat, we don't touch dairy. All our products have always come from, the farming community, where the majority of Australia, with what we can't get, comes from overseas, which allows us obviously to have a lot less carbon footprint. We've got a business that's very capital light. We don't have big factories, we don't have big emissions, but we certainly have a very capital light business that doesn't pollute and do what traditional dairy and meat tend to do. The growth trends, so in the baby food market alone, that's growing quite exponentially. So we see that there's a lot of space for other brands. There's just not that many baby food brands around the world that really have cut through across certain regions. So we see our brands having some really good traction across Asia Pacific and Southeast Asia, China, where we really have that base of operations and that great ability to scale and launch. So look, it's a massive market, and population growth is a key driver for that. So we're quite excited to hit the international markets. The structure, so yeah, the three key brands, we do have Century Mill, which is the plant-based, anything plant-based wellness, essentially all functional ingredients that are very on trend, stuff that's harder to manufacture, but it fits right into that, people that want that fibre or protein increases. Funch, it's our baby foods, which is also our snacks as well, so our protein snacks as well as our gut health smoothies. Basically, it's a fun family brand, and we're very much ensuring that it can cut through all facets of people's daily lives in a very premium brand sense. And Forbidden, which is our existing rice range, which has been in Woolworths and a number of supermarket chains for a number of years now. The Funch range, so we did announce this with AUR. This has been completed. We've actually just completed production of our first batches, so they're starting to roll out. You'll see those on ECommerce and our channels coming through very soon. And then we do have some important announcements coming up once we can allow it. But yeah, very excited. We wanted to get all our productions completed with the IPO capital and all deployed, all the products all produced and deployed pre-Christmas. Which is looking very much on track. So we're going to have a very good end of the year and a good start to 2021 with no issues on productions, delays, constraints. The Funch mixes, these are also in production pre-Christmas. So we'll have those in large scales and large quantities to keep up with our demand, especially on ECommerce as well as retail. Century Mill flours, they've been getting distributed quite widely since they launched in the tail end of sort of June, mid-July. They're getting quite a lot of prominence on shelf, and we are getting quite a lot of good feedback on people that have used it during COVID, especially to cook and to do what they need to do. So very good results on that product range, and we see that doing quite strong into this new post-COVID environment of home cooking. The rice range, obviously rice did very well during COVID, so it's still going very well. We've seen a very big uplift in our retail sales. All the retail sales uplift in rice and our Sensory Mill range basically filled the gap in our food service. So restaurants all dropped off, but we saw just a massive influx of orders and demand for the retail products, which is great because it's still quite strong and it's setting a new benchmark. So as food service, as restaurants come back, the business itself will be in a much stronger position growth-wise once that's going full guns blazing as well. The channels, just a quick mix there. Food services, I mentioned, did drop off a bit in COVID, but that was filled with the gap of retail. Now that's coming back, so we are seeing quite good numbers come through, especially now Victoria's opening up too. E-commerce as well. We did really pump a lot of our time and efforts into e-commerce pre the IPO, and now that's showing quite a lot of good traction. And look, come the end of the quarter, we should be in a good position to update the market on just how great that's going. So yes, that's important. And export markets. So these are what I mentioned before. We have New Zealand, Singapore, USA, and Ireland, which is these are the markets we've been shipping to regularly already. And they continue to be good ordering. Just the management team, myself, Jared as founders, and look, we're driving the business quite strong. We are also the biggest shareholders, so this is our nest egg. We're driving this business, for the long term, and we certainly have a big vested interest because it is our shareholding. So we're going to make sure that we do, great brands, great products that are going to resonate with the next generation of purchasers, because we are also in that millennial demographic, so we sort of have that good understanding of what's needed. A great board that we're all working quite well together. We talk. It's a very, very conducive board that is working very well, and we're very happy with how the business is structured going forward, as well as we grow. So we see that scale only strengthens the board and how we work together. And that's all from me in the presentation. And Tim, I'll open up to questions.
Thanks very much, Marcus. Nice presentation. So as I said before, all attendees welcome to submit questions through the Q&A box at the bottom of your Zoom panel. We've had some come through, so I'll hop straight in. Marcus, have you seen the impact of COVID-19 affect your supply lines? And if that's been an issue, has that abated now?
Yeah, look, we did initially. So probably when COVID first hit back in March, April, really hard. That's when we saw supply delays of up to a month or more. But look, the rest of the world is sort of, especially Asia for packaging and whatnot, that's sort of been alleviated. So we haven't seen many delays. And also too, we did a pre-IPO and then the IPO. So we've actually bolstered a lot of our inventory and what we need to grow the business a bit before time. So we haven't seen any real disruptions to our business.
Thanks, Marcus. Just looking to your various paths to scale, looking to the international opportunity, do you expect to sort of distribute all of your products there over the sort of short to medium or longer term, or is it sort of more of a subset of your product suite which are applicable into different markets of interest, do you think?
Yeah, so look, the baby food range, the Funch range can go pretty much into all international markets. Now, there will be potentially markets that may want just the baby foods first, the purees and the cereals sort of powder range, and we can accommodate for that. But look, we do have trademarks either registered or nearly registered in a lot of these markets. Like UK, we have a trademark. So we have the ability to expand the entire ranges into these markets that we've got the trademarks in. So ideally, that's what we would like to do, not sort of have bits and pieces all dotted around the world.
Thanks, Marcus. And in terms of sort of the structure of the business, how well does this business scale up? Should we expect to see a similar sort of margin structure in future periods as those which you announced prior to your ASX listing?
Yeah, so look, our margins are already quite a bit better than, say, Bubs. So we're already quite ahead by about 10-12% on GPs. So we're already in a great position as a quite a lean new business that doesn't really have those overheads, legacy overheads. So for us, we're a low capex business. We basically we control the supply chain in the sense that we procure everything ourselves to keep costs down, but we don't actually go and own machinery, own factories that are high labour, high overheads that are basically, that if you don't have business, those facilities still cost money to run. So we're very much able to scale quickly. And look, if we ever needed to purchase an asset like that, that can be easily done.
Thanks, Marcus. So I guess on a similar sort of vein, but looking to more closely to the online side of your business, the question is, how is your Econ business going? What are the margins like in that business, and how big do you think it can get?
Yeah, so look, it's we're obviously coming off a low base, especially with Funch. So if investors go to funch.com.au, they'll see that site come to life, and there's quite a bit of ecom traction on that. Look, we did see when we first put the products and the product bundles on that Funch website, especially for the DIY protein ball mixes, in the first month we saw a 1900% increase in sales. Now, obviously off a low base, but it's growing quite drastically. Hence why end of the year, we'll be in a good position to update just how good that is. But look, for us, ecom will be a big pillar of the business going forward. Especially our team, we're all very digital savvy. We know we're sort of quite adept to how digital works in the back end. So we're quite keen to pump that up even further.
Thanks, Marcus. Question about sort of dealing with other, counterparties in the value chain. Probably interesting, particularly given, I think, Jared's history within the supermarket space. What has it been like to deal with the supermarkets and other distributors, and is there much sort of competitive tension that comes in at that end of the chain?
There is, and I think it's important for food businesses. We've been around 10 years and we've seen a dozen businesses come and go because they go to the supermarkets too quickly and they end up being 99%, 100% revenue from supermarkets. It's a balancing act. You've got to understand that Australia is a small market. We're 25 million people. So realistically, it's taking the best contracts you can, introducing the best products you can with the best margins into supermarkets, but not necessarily being, putting your whole business, into those channels. So we've had products come and go into supermarkets, and look, we've been very selective on the products we put into the supermarkets because we know how risky it can be as a food business if you put all your eggs in one basket, especially in such a low margin basket.
Thanks, Marcus. And so I guess looking to your peers, obviously this is a relatively competitive space in terms of healthy snacks and whatnot. So what would you point to as your key points of differentiation against the other competing products on the shelf?
Yeah, so look, our products they're a more premium product, so that we are fighting on, better quality. Look, we're not drastically different. It's in price. There's not a massive increase in price, but we aren't going to the bottom dollar on quality to say appease, to do a supermarket sort of arrangement. So our products, tend to be better quality. We do tend to have high nutritional benefits added, whether that's in our baby foods with DHA, very much Australian 100% purees that aren't cut with, sugar or foreign purees that tend to be highly, high sugar. So we do tend to fight on a much better quality product, which is resonating quite well.
That's good. Just in terms of Funch baby food, are we able to give a specific launch date around that product line?
Yeah, so I was at the factories last week. So we've had the first batches completed. So we are going to start rolling them out. ECommerce first, which will be instantly available for investors and consumers to purchase. And we are going to start allowing orders from that AUR deal we announced. So they're going to be able to start ordering through with fulfillment either, mid to end December or early Jan. We do have a couple of advanced discussions with two other parties, which we elaborated to within our IPO, the sort of channels we are going for. So they're pretty advanced and should be ready to announce once we get them across the line in the coming weeks.
Sounds like a few potential catalysts in the works there, hopefully. So another question, Marcus, that's come in. Could you look to be acquisitive as some of your competitors have been? And if so, what could you look to buy?
Yeah, and we are. We're basically putting our short list together on acquisitions now. So we're looking for complementary businesses that can bolt on quite easily to our supply chains. Now, look, we have a number of targets that we would like to sort of look at first. But I think for us, we're a very adaptable business that can bolt on acquisitions quite readily and scale. And that's what I wanted. I want a business that essentially has not got lingering overheads or say big overhead costs that can't allow us to scale with an acquisition, say locally or overseas.
That's great, Marcus. I think the picture you're painting is one of a business that's got shots on goal in terms of organic growth, potential inorganic growth, and obviously the expertise is there inside the business to to find the niches of value in this enormous addressable market. So that concludes the Q&A component of our presentation. So I really want to thank all attendees for tuning in and listening to Forbidden Foods today. Marcus, thanks very much for an interesting presentation, and I'll pass back to you just for any closing comments.
Yeah, no, thank you for your time, Tim, and all investors. Look, the business it's early days for us. So look, any questions and queries, you can direct to Tim or come to myself directly. And look, we're basically ready to go.
Good stuff. Thanks very much, Marcus, and thanks everyone for joining us. We'll catch you again next time.
Thanks all.